play to win versus play not to lose. That's the question that has been going through my life. I think it's very relevant today. We had the largest drawdown in our fund, down 55%. And I want to elaborate on this and also relate that to our strategy running Orange Capital Partners. It's September 8th, 2020. This is the Not Even Wrong podcast. This is Krim Delco. As I said today, the fund was down 55%. The market down about 3%. For the year, we are up 139.5%. And the market is up about 1.5%. So we're outperforming by 138%. If you put $100 in Orange Capital Partners on January 1st, and you put $100 in the S&P 500, you would have $239.5 in Orange Capital Partners, and you would have $101.5 in the S&P 500. The main driver of today's drawdown is Tesla. There's a plethora of news that came together today. The fact that Tesla is not included in the S&P 500, competition with GM and Nikola. They announced a collaboration for a pickup truck and also semis. Actually, no, it's just pickup trucks, but there's also speculation there could be more. So there's a validation for Nikola, which is a competitor for Tesla in certain segments. We have a blog Bill Gates wrote where he talks about the future of electric cars and doesn't mention Tesla. Then we have some market technical news. SoftBank playing around with options, taking risks on tech stocks, and kind of being exposed, and that's always a bad thing if everybody in the market knows your position. So all of these things together drove a sell-off in tech, and Tesla has been the main driver in terms of dollars, and they're not the most important one because Apple down 6% is actually more market cap loss in dollars than Tesla down 21%. But still, Tesla is a main driver, and we would conclude that today's sell-off is this combination of news. It's a correction that also the valuation of Tesla probably warrants because it was quite stretched, and without some fundamental support, it's hard to keep that kind of valuation. So altogether, we are looking now at a situation where we had a drawdown of pretty much 100%, so we lost about as much money as we had NAV at the beginning of the year, and that leads me to the strategy and the question: how do you play? Do you play to win or do you play not to lose? I chose to play to win. I chose to play to win very early on in my life, and I particularly chose to play to win when I started Orange Capital Partners with Zovinar. Very early on in our procedures as a fund, when we had actually the first couple of years, which were very strong, and we started to attract capital, I had a conversation with one of our investors who also is a hedge fund manager, was a hedge fund manager in those days. And, we had, let's say, something around 25 million under management. We had a CAGR of double digit, something like 15% through 2008. So we survived 2008 with a win, and then we just kept doing pretty well. So I had this conversation, and he told me that we are too concentrated, our volatility is too high, we're taking too much risk. He said, look, you can build a fund, you have a very good CAGR, you had a very strong 2008, which goes a long way amongst investors. Why don't you relax, diversify, keep your volatility low, keep the returns relatively low and less volatile, but then attract capital. So play not to lose, attract capital and collect commissions. And I thought about this. I thought, well, that's a very reasonable strategy. You have the opportunity to collect $100 million in assets, 200 million, $1 billion. Even if you only collect 50 basis points on that, that is quite some good fees. And I chose not. I chose to win. I chose to play to win, which is to generate high returns. The purpose of Orange Capital Partners is to generate wealth by investing in technologically driven disruption with large impact. That is a strategy that chooses play to win. I had other examples in my life. When I started with Neue Zürcher Zeitung as in the newspaper business, right out of college, I was asked to be conservative, do all the things people do when they start a new job. I chose the opposite. I was aggressive. I took risk. I wrote aggressive columns. I wrote aggressive articles. I got criticized a lot, but I also got a lot of accolades. I played to win. I don't know if I won, and I think playing to win is in the end not exactly the kind of game where you actually end up winning. I think play to win is a strategy which is a continuous behavior. Everything you do, you play to win. I mean play to win. That means that you play your strengths. You don't try to hide your weaknesses. That's really what it means. For us, Orange Capital Partners, our strength, as I elaborated in several episodes before, is our approach towards generating wealth. We think we have a unique approach where we have a certain theory which is built on thoughts and books and experiences from entrepreneurs, particularly entrepreneurs and venture capitalists. We have a certain model, we have a certain way to look at the world that is unique to us, and therefore we are able to engage in companies that we believe have the potential to generate wealth. This is our strength. Here's what's not our strength. Our strength is not uh, to pick highs, pick lows, that kind of thing. It's just not our strength. I'm not saying it's a bad thing. There are particularly algorithmic traders out there which are able to exploit short-term volatility. That's just not our strength. And we don't want to be in a position where we have to hide our weakness by not being able to pick highs and lows. It's just not what we do. We believe that playing our strength will generate the kind of wealth that we're looking for. We're looking for a 5x in the next 5 years. And therefore, we believe that making or losing a couple $100,000 here and there because we're not picking the high and selling at the high and then buying back at the low, that is not going to be the end of the world for us. It's of course in the moment disturbing to give up that kind of drawdown, but that's not the point. The point is your strength is to play to win, and winning in our context means to generate wealth. For example, when I was at my newspaper, my strength was to find interesting stories that show, on the one hand, where the future is heading, and on the other hand, show the shortcomings of established managers. For example, in my case, there was a very high ranking, actually, a CEO of a large bank, which misunderstood certain technicalities of the options market. And I caught that and I wrote a story. So I took a risk. I took a technical risk. I took a reputational risk. And I certainly took a business risk, because attacking somebody like that, one of our largest advertisers, wasn't an easy thing to do. But I did it because that was my strength. I did not do it because I wanted to show off or anything like that. This is my strength. This is all I can do. Alex Honnold is the best free solo climber in the world. He plays his strength. He climbs El Capitan. He's not trying to do other things that he might be also good at. Maybe he can transfer learn or something like that. No, he's playing his strength. I could go on and on. The most famous examples. Michael Jordan, play at his strength, throw the free throw at the right time to win the game. This is what you play. This is how you play for strength. And I think for us, it's unbelievably important not to get caught in the daily narrative flow of stocks and then forget what our strengths are. I talked about this yesterday. The narratives which can take over. They have a life on their own. And if you don't play your strengths, you can be hijacked by them. Some people are good at playing the narratives. Good for them. Keep playing. For us, it is generating wealth by investing in disruptive technologies with high impact. This is what our strength is. There is nothing else. And we believe that this is in line with what the markets actually are doing. As I discussed in a previous episode, the purpose of the financial market is actually to generate wealth by finding disruptive technologies with large impact. And it is absolutely in line with our investors. The joy of giving our investors high returns, that alone is worth playing to win. Of course,
freedom, the independence it gives to us and our lifestyles and our operations is invaluable. And then thirdly, most importantly, the ability to do the right thing with our capital, not to be constrained by conventional wisdom or anything like that, is also a very valuable thing. So play to win, don't play not to lose. Thank you.